Okay, this is what my chart is looking like now. So on this chart, what we are looking at is known as the bar chart. On our MetaTrader 4, we have three different reading of price. You could either see your chart as a bar chart or a candlestick or a line chart. So these are the three chart patterns with three patterns we have. So most people prefer trading using line charts. Some persons prefer, many traders use candlestick, while some persons use the bar charts. So today we'll be looking at candlestick. We'll be looking at candlestick. So candlestick charts are useful in order for us to understand the price action and order flow in the forex market. That's the reason why we use candlestick. So the most important thing is you need to understand how this candlestick. You need to understand how the candlestick forms. Now, in forex, we'll have the bulls and we'll have the bears. The bulls are always pushing the market upward, while the bears are always pushing the market downward. It means when the market is going up, we say the buyers are more in the market, which is also signifying an uptrend. When the market is coming down, we say the market is going short. It's also the market is bearish, which means the sellers are more in the market. So on this region, we'll have more sellers, while on this region, we'll have more buyers in the market. So if you check, the market has been trending downward at this point. Coming down to this point, it started going back up. So we have what we call, before a candle forms completely, we have four things the candle needs. It needs an opening price. It needs the highest price. It needs a lowest price, and it needs a closing price. That's what forms a complete candlestick. A complete candlestick in the forex market. So I'm going to zoom this. Let's take this candle. I'm going to explain. Let me highlight the points where I want to start. So let me use this candle to illustrate. So now when a candlestick opens, because it opened and started going up doesn't mean it's going to close as a bullish window. The most important thing you need to understand is, I said we have the opening price. The first point where the market opens is known as the opening price. On this candle now here, this region where the cursor is the opening price. The market moved upward down to this point. This is the highest price, which is the H. We have what we call OHLC. The opening price, the highest price. O stands for open. The H stands for the highest price. L stands for OHLC. So this is the closing price. This is the lowest price. we'll have the highest price the market went. And we have the opening price. So for a candle to form, you need OHLC, the opening price, the highest price, the lowest price, and the closing price in order for you to get a complete candle formation. So on this candle, I'm going to use this crosshair. This is the opening price of this candle. This is the opening price, which is 12,145.94, and we'll have the highest price as 12,188.92. We'll have the lowest price at this point. This is the lowest price this market went, which is 12,026.26, and we'll have the closing price at, okay, on this chart you can see it's opening price, high price, low, close, and the volume. So we'll have our closing price at 12,103.58. So what happened on this candle is this: immediately this candle opened, it first of all went up, it moved 44 pips, it was bullish, and the bears started pushing the market downward. Now this is known as a wick, WICK. Call that long line wick or shadows in forex. So when you see that long rejection, this is known as a rejection in the market. So when you see this long kind of line, you call it a wick or a shadow. So what happened here was when this market went upward, the sellers pushed the market downward, which is the bears pushed the market from those points coming down. They pushed this market down to this lowest price, 12,076.26. And the bulls succeeded in pushing this market back up at 27 pips, and they finally closed at this price. So let's look at this candle now, this particular one forming. Now, if you notice, the market has been bullish, got to this point. The bulls tried pushing these markets upward, but they couldn't. Now you see the sellers has pushed this market from those points, which is the highest price this candle went, and it has given us a volume of 43 pips. So if you were selling from those points, let's check how much you would have made. Let's say I place a buy. So if you were buying or if you were selling from that point, you would have made 28,000 selling at 0. 0.10. That's one mini lot size. You would have made profit from there. So we are on a 1 hour time frame. Remember, I said what gives us a complete candle formation is OHLC. On this candle, we'll have the opening price here. This is the opening price of this candle. This is where you see it on your charts. If you check on your chart, you always see a price reading at the top, just beside your instrument. This first price is known as the opening price. That's the O. So let's find out if this price is going to rhyme with this price here. So we said what we are seeing here is 12,162.06. So let's confirm. It says 12,162.90.60. Okay. Then we'll have the highest price, which is 12,171. So this is the highest price, 12,171. We'll have the lowest price, which is this point is lowest price this market has gotten to. Okay, then this is supposed to be the closing price, but this candle is going to close in the next 2 minutes. This is 8:58. So by 9 o'clock, a new candle will form. It's going to open below here. Now, there are two things you need to understand. A bullish candle opens from below and closes above, while a bearish candle opens above and closes below. This is what I mean. A bullish candle opens down from below here and it closes up, while a bearish candle, this is a bearish candle, it opens above and closes below. So these are the things we need to understand while trading candlesticks. So you could be trading candlesticks alone and you could make good profit trading candlesticks. Now the candlesticks are what forms chart patterns. We'll have candlestick trading and we'll have chart patterns, different chart patterns if you're trading in the market. Okay, now the new candle has formed. This is exactly 9 o'clock. Now, because this candle opened as a bearish candle doesn't mean that it's going to close as a bearish candle. So we've gotten our opening price, which is here. But this market is going to push downwards. So let's see what happens. This next candle is going to close in the next 1 hour. So we are looking at a 1 hour candlestick. So the market has opened here and the bears are trying to push the market downward. So let's see what's happening. So I placed the buy, reason that I make the market to pull back a bit before coming down. So I'm going to exit this buy if the market goes up a bit. So let's just see what happens here. So now let's go to 4-hour time frame. Let's see what's happening in 4-hour time frame. I hope we're all following. Are we following?
Yes, we're following.
Okay. Do you have any question?
Well, I do have a question, but let me try and summarize what you talked about so far. First of all, you said that when the candlestick is going upwards, it means that okay, that means we have more buyers, right? And
Yes.
then it's a bullish candlestick,
Yes.
and it's likely to end in profit if you are to buy.
Yes.
Then if it's going downwards, it means that we have more sellers in the market.
Yes.
And so it's a bearish candlestick. Then you talked about um 4 parameters. You talked about the opening price, the highest price, the lowest price, and then the
Closing.
closing price. Yes, then you talked about okay, how to know a bullish candlestick and a bearish candlestick. You said a bullish candlestick forms from below and goes upwards, right?
Yes.
Whereby a bearish candlestick forms from above and then goes downwards.
Yes. Okay. All right. So let's progress. So now we are. Let me take it down to 30 minutes. Okay. Now this is what happened here. Like I said, um, this market was moving up. It got to this point and couldn't break this point, this level. So it started coming downward. Now, after the bearish candle, we'll have different types of candlestick in the market. We're going to look at them extensively later as we progress. So um, Now, we have what we call reversal candlestick. What candlestick that brings about reversal in the market. So immediately this candle, this is a bearish candle. You see, we have one, two, the third bearish candle is forming. Now, before this one formed, see what happened here. Immediately when it tried pulling back up, but it later ended as a bearish candle. Now, this next one has opened and is still having more bearish pressure. In between, you see these things that are happening. There are buyers in the market. Before you see this candlestick form completely as a bearish candle, on the smaller time frame, let's say 1 minute, you will see buyers also in the market. So somebody could buy at this point and still make money while buying. But if you're looking at making profit, um, let's say a reasonable profit, you should be selling instead of buying. So let's look at a smaller time frame and see what happened. Let's look at 1 minute. Now, this was when this market started. Okay, now see what happened here. Let's see, as this market is put, immediately it drops. You see, there are buyers also in the market on a smaller time frame. The market sold, it bought, it sold, got to this point, and started buying to this point. Then at this point now, you see it has been selling. In as much as it has been selling, we also have some buying candles, some bullish candles in between. Let me zoom. Now, these shadows here as a result of the buyers trying to push this market upward, but will have more bearish pressure than bullish pressure. So this shadow you're seeing here is as a result of buyers trying to push this market to return this market back up. Now you see, we are trying to see a bullish candle form here. This is known as a pin bar in the market. So most people will prefer to this one when they see this pin bar. This is going to actually tell us, okay, a reversal is about to happen in this market, but we still have more bearish pressure on a smaller time frame, even on a higher time frame. So let's look at 5 minutes, what's happening on a 5 minutes time frame. See, the market is still selling. We still have that sell here. Let's look at 15 minutes. 15 minutes still has more sell trade. So, okay, I have to end this. So hope you understand how each of these candles open. Now you see immediately the candle went downward. The bullish candle opens up below, moves upward. The bearish candle opens above and takes the market down. So this is that different with a bullish and bearish candle forms. We're going to look what brings about the formation of these candlesticks on our next class. Hope we're okay with that.
All right, we're okay with that. But I don't know, I don't know if you could explain more on, we're talking about pips.
Okay,
So how
peeps.
does someone read pips on this chart?
Okay,
And
now
how does pip help to tell, okay, if somebody is gonna make profit or loss, or that kind of
okay, the peep now. This
thing?
is what peep value does. It tells us how much we are going to make particular amount. So let's say you're expecting to make 1,000, 10,000. Remember, your lot size also matters. If you're trading using 0.01,
Everyone.
I always tell us to trade on 0.01 so you understand the risk very well. Now, 12.2 pips gives you 1,000. Now, this is what I mean by 12.2 pips. You need to know the price. Let's pick this price now. 12,125. Now, if you add 12.2 to this price, let's say you're going to get um, that's 12,137. Now, if the market moves from 12 125 to 12,137. You're going to make 1,000 naira if you're trading at 0.01. If you're trading at 0.10, you're going to make 10,000. So let me place a pending order so you understand. On this screen here, I'm going to pick a price. Buy stop. Okay, I'm going to pick a price of 12118. 12118.00. Now, if I should add 12.2 to this price, it means I'm expecting to make 10,000. My lot size is 0.10. So what I'm going to have is 12,120. 12,120 dot 20. So if I should place this, okay, now that trade won't be triggered because I already have open trades. Okay, let me pick any of this. So if this market moves 11 pips, I'm going to make 10,000 from this market. Hope you're seeing it. I'm trading at 0.10.
Wow.
So if I was trading at 0.01, it would have been 1,019 naira. That's what I would have made from where this market is down to this point. So for every 2 pips or for every 11 pips, you make 1,000. So all you just need to do is from your entry price to subtract or add 12 pips. That's what will tell you how much. So if you're trading at 0.05 and you add 12 or 11 pips to your entry, let's say you're buying, if you add, it means you're expecting the market to go up. That's why you're adding. If you're selling, you're subtracting 12.2, 12 pips or 11 pips from your entry price. This is what I mean. So this is the order. This is the lot size. This is our entry price on this particular trade. This particular trade is this first trade here. That's why we're having this bigger negative. While these other ones are, if you check, this price is lower than this. So and these ones are running on minus 8,000. So let me say I don't want to lose anything. So you see, I've set minus 10,000. So if this market should come here, it's going to close out this trade in loss of 10,000 naira. So, and the pip value is 11 pips. Immediately that gets to that point, that's closed. So let's verify. See that trade closed in loss. This is the trade. It hits SL at minus 10,000 naira. So do you understand?
Yeah. Well.
Okay, so I'm still going to break down that just more on pips. So we'll stop here today.
Hello.
Yes, I can hear you, ma'am.
Please, this
Yes,
can someone trade without candlestick?
What do you mean without candlestick? Like,
let's say the person will remove the candlesticks from. Is it possible that somebody can remove these candlesticks and then trade on a say chart?
Okay, this is what we only have 3 different charts. You have a bar chart, you have a line chart. You can either say, okay, I'm going to trade a line chart, but if you're trading a line chart, you see this is complicated. You can't know where the market is going.
Yes.
If you're trading a line chart. Now, if you're trading a bar chart, it's also kind of difficult. to read a bar chart. So you need a candlestick to understand a candlestick to understand where the market
Okay.
is actually going. So you just need a candlestick chart. It's either you're trading a line chart. Most times I decide to trade line charts. There are things I look out for. I can say, okay, I know where this market will be going from this point or from any point. So, well, if you're starting trading newly, you just need to understand candlestick.
Okay. It's okay.
All right. All right. Thank you.
All right. Thank you.
Thank you very much.